All right, in this video, we are going to do the question Patronic from consolidation. It's the question number 370. I'll be explaining this how to solve, but you're going to solve it by yourself on the Excel sheet, and I'll not be solving it myself because we have done many questions and now it is your assignment to do that. But obviously, I'll be defining each and everything. Calculate the consideration paid on the acquisition of the Patronic on 1st August 2007. We are just supposed to calculate the consideration part for the 3 marks. And then you have the B part, which is prepare the consolidated statement of profit or loss for the Patronic. So 17 marks is a 20 marks question. On 1st August 2007, remember one thing I said, that whenever you're preparing the consolidated statement of profit and loss or the consolidated statement of financial position, but more specifically the income statement, you need to know the date of acquisition and the year end. So the year end is 31st March. So that means a mid-year acquisition. So August, September, October, November, December, January, February, March. So there are 8 months. So you need to do the subsidiary pro rata 8/12. On 1st August 2007, Patronic purchased 18 million of the total of the 24 million equity shares. So now in this question, you need to calculate the percentage, which is quite simple. They have acquired 18,000 shares out of 24,000 shares. Multiply by 100. This gives you the percentage. So 18 divided by 24. It's 75%. So this is actually the percentage. Fine. On 1st August 2007, Patronic purchased 18 million equity shares. The acquisition was through the share exchange of 2 shares in Patronic for every 3 shares in Patronic. Both entities have the shares with a par value of $1 each. Now you can calculate the share exchange. Okay, fine. How many shares you have acquired? 18,000 shares. Clear? Okay. And what is the fraction? The acquisition was through a share exchange of 2 shares in Patronic for every 3 shares. So 2 divided by 3. Okay. And fine. The market price of the Patronic share was 5.75, and you multiply it by 5.75. It gives you the share exchange. So 18,000 divided by 3 multiply by 2 multiply by 5.75. It gives you 69,000. So 69,000 is the amount that has been paid in terms of share exchange. Patronic will pay a cash on 31st July 20X9, 2 years after the acquisition, 2.42 per acquired share of Patronic. And now this is the deferred consideration, and you need to calculate that. Okay, fine. How you can calculate that? So it's simply 2.42 per share. So multiply by 18,000. And they're paying after 2 years. So 1 plus R, R is 10%, raised to power minus 2. Okay. So that is 1 plus 0.1 raised to power minus 2, it is 0.826. So 0.826 multiply by 18,000 and multiply by 2.42. It gives you 35980. 35980. Let me check it, like if it is some 1 plus 0.1, yes, raised to power minus 2. Okay, multiply by 18,000 and multiply by 2.42. So it's 36,000. Yes, round off. It's actually 36,000. Yes. So 36,000 is actually the deferred consideration. So 69,000 plus 36,000 is actually the consideration. The reserves of the Sardonic on 1st April 2000 was 69 million. Patronic has held an investment of 30% of the equity shares in Acrabic for many years. Acrabic made a profit of 6 million. That is simple. A share of profit from associates, so 6,000 into 30%. So 6,000 into 0.3 is 1,800 is the share of profit from associate which you will be adding in the income statement. Fine. Now the revenue, cost of sales, distribution costs, administrative expenses, finance costs, and simple. The fair value of the net assets of Sardonic at the date of acquisition were equal to their carrying amount with the exception of property, plant, and equipment. Property and plant had a fair value of 4.1 million, that is 4,100, and 2,400 in excess of their carrying amount. That means it is upward revaluation. Fine. The increase in the property fair value would create additional depreciation of 200 in the consolidated financial statements, and this is for property. And plant had a remaining life of 4 years, straight line method at the date of acquisition. All depreciation is to be charged to the cost of sale here. They have told us. Okay, fine. So now this depreciation, the depreciation of the property was given. It is depreciation is 200, and we need to calculate for this 2,400 divide by 4 into 8 divide by 12. So 2,400 divide by 4 into 8 divide by 12, it gives you 400. So 400 plus 200, the total depreciation 600 is to be charged to the cost of sales. Okay, fine. No fair value adjustments were required on the acquisition of Acrabic. The finance cost of the Patronic do not include the finance cost on the deferred consideration, so that you need to calculate that. Okay, what is the amount you have calculated? It's actually the 36,000, which is the deferred consideration. When you unwind it, you will be multiplying it by 10%, and because there are 8 months, so 8 by 12. So the extra finance cost would be this. So 36,000 multiply by 0.1 and multiply by 8 divided by 12. So it's 2,400. So unwinding of discount, which is the finance cost, is 2,400, which you will be adding in the finance cost. Then you have prior to its acquisition, Sardonic had been a customer of the Patronic. In the year to 31st March 2006, Patronic sold goods at a selling price of 1.25 million per month to Sardonic, both before and after its acquisition. That is fine. Now you can calculate that 1250. 1250 into 8. So 1250 into 8, it gives you 10,000. So this 10,000 should be reversed from sales as well as cost of sale. That means intergroup sales and intergroup purchases, 10,000. Patronic made a profit of 20% on the cost. That means this is markup. At 31st March 2006, Patronic had still inventory of 3 million. So we need to calculate the unrealized profit. So 3 million means 3,000. And the profit percentage is 120. So this depicts 120 and multiply by 20. So 3,000 divide by 120 multiply by 20, it gives you 500. So 500 is actually the unrealized profit, which should be added to the cost of sales. Patronic had a policy of valuing the non-controlling interest using the fair value. An impairment test on the goodwill of Sardonic concluded that it should be written by 2 million. So this is the impairment of the goodwill, which is 2,000. All items are deemed accrue evenly throughout the year. So this was a very, very simple question. Now what you will be doing is revenue 1,50,000, 70,000 into 8 by 12 minus 10,000. And then similarly, cost of sale, again, this 8 by 12 and then minus 10,000. And then you will be adding the unrealized profit and the depreciation, 600 plus 500. Okay, then you have the distribution cost, administrative expenses, and the finance cost, you will be adding 2,400, and that's it. And then there will be a share of profit from associate, which we have calculated. That will be 1,800. And this is your plain question. So this is your assignment. You need to solve that on your Excel sheet and send me on the marfatonline@yahoo.com.